You have heard about ETFs and mutual funds, but you are stuck thinking, which one is actually better for me? You are not alone in this ship. In fact, most people don't lose money because investing is hard. They lose money because they pick the wrong vehicle for how they think, earn, and behave. So in this video, I will be breaking down what ETFs and mutual funds are, why one might quietly cost you more money, and which one you might choose depending on your situation. Still to the end, because I will give you a simple action you can take today, even if you are just starting with your investment journey. Right now, you might be thinking, aren't ETFs and mutual funds basically the same thing? You are partially right, but that assumption is where people get tripped up. Both ETFs and mutual funds pull money from many investors, invest in stock, bonds, or other assets, and help you diversify without picking individual stocks. Is in how they are managed, priced, and assessed. And those differences affect your fees, flexibility, and long-term returns. A basket of investments that trades on the stock market, just like stock. That means you can actually buy it during the trading hour, see the price real time, and buy as little as one share. Now, here is what you might be thinking. So ETFs are cheaper and more flexible. Here are why people love ETFs. Very low fee, high transparency, easy to buy and sell. They just track an index like the S&P 500, total stock market, bonds, or global markets. No fund manager trying to beat the market, which is very important because trying to beat the market usually costs more and fails more often than you think. But then ETFs aren't perfect, and if you are thinking there must be downsides. Mutual fund, on the other hand, is also a pool of investment, but works differently. Instead of trading like a stock, you buy or sell at the end of the day. The price is calculated after the market closes and often requires minimum investment. Now, here is what you are probably wondering. Why would anyone choose mutual fund over ETFs? Good question. Mutual funds are often actively managed. Professional fund managers are making decisions on your behalf. There is easier automation on your investing, especially when you are an employee. So employers usually use it for your retirement investment. But here is the uncomfortable truth. Active management doesn't guarantee better returns. In fact, actively managed mutual funds underperform the market and charge higher fee that quietly eats into your returns. And this is where most investors lose money without realizing it. Let me ask you something. If two investments earn the same return, why would you want to choose the one that charges you more fees? Exactly my point. Yet, millions of investors do unknowingly pay more fees. And over the course of 20 to 30 years, you'll find out that when you compound those fees, you have really paid a lot of money to your fund managers. But you might say, my bank usually recommends mutual funds. Of course, they will recommend it because you have to pay them fees, right? Which goes to their pocket and not you. Now, let's bring this back to you as an investor. ETFs are usually better if you want low fee, right? You are comfortable using a brokerage account. You want long-term growth and you like simplicity and transparency. You don't want to overthink this investment thing because it requires a lot. Mutual funds, on the other hand, may make sense if you are investing through a workplace plan. You want fully automated contribution every week, 2 weeks, every month, and you don't want to manage anything yourself. You are okay paying higher fee for your convenience, but yet it's a real question you should ask yourself. Do I want to for convenience or keep more money working for? There is no right or wrong answer, but there is an informed answer. And that is what separates a confident investor from a confused one. Here are simple things you can do today. Look up the fees on your current investment. If you have started investing, for your expense ratio, brokerage fee, or your commission. Starting, learn about broad market ETFs. Focus on consistency, not perfection. And if you're already invested in mutual funds, compare your mutual fund to ETFs alternatives to see what you are really paying. Comment section. Are you currently investing on ETFs or on mutual funds, or you are still thinking which one should I go for? If this video has helped you, like and subscribe to the channel for more practical money investment down. Share with a friend who keeps saying, I want to invest, but I don't know where to start, because the best investment you can make today is understanding where your money is really going to.